On to one of my favorite things to discuss, business and economic news in and around South Africa. Now, the week has been inundated with company updates, with interesting insights that have come about. So we had African Bank that bought Grindrod Bank, so that obviously being a part of its strategy to get into business banking. Then we had an update from Tiger Brands, doing rather well given the circumstances, although warning that inflation is going to have an impact on food prices. But their Jungle Oats is not doing great, which means people are not buying Jungle Oats. They're not eating it anymore. And I've got Gary Booysen, who is a market analyst and director at Rand Swiss, who joins me now to discuss those two issues, as well as all the other things that have been happening during the week. Gary, thank you very much for joining us this morning. And I must ask you, why are you not eating your Jungle Oats, Gary? Why is Tiger Brand struggling with this particular brand?
Strangely, I actually had Jungle Oats for breakfast this morning, so it's just it's not me. I'm doing my best, but it's interesting. So I mean, obviously there are serious challenges for the likes of Tiger Brands. If you just look at their business model, Tiger Brands obviously sits between the input costs of higher commodity prices and consumers that are essentially under pressure, because obviously they sell into the retailers, and the retailers can only push on price increases at such a level. So often you do see Tiger Brands in very difficult situations, having their margins squeezed a little bit. But I think it's I mean, if you listen to the CEO Noel Doyle, you kind of mentioned it in the top of the segment. We are in for some serious price increases, and this is just as inflation creeps into the system, we're going to see the kind of basic foodstuffs that so many people consume starting to get very, very expensive. When that happens, you do start to see almost substitution. So you'll see people moving from kind of maybe high margin products, often that is the kind of brands that sit inside Tiger Brand stable, to kind of the more basic foodstuffs. So I think we're in for certainly a difficult time. Looking at the headline earnings of the company, they were down around 2%. Part of it was as you said, Jungle Oats, but the whole bakeries division did struggle. They obviously also had strikes at their snacks and treats business. But I suppose the one thing that is a positive just for shareholders is that the company has fairly low gearing. So while we are seeing interest rate increases coming through the system, they feel confident enough to start returning capital to shareholders via a share buyback program that was announced, which just helped to support the share price slightly.
No, absolutely. And of course, these are the sentiments when we go back to the inflation issue that's been discussed. It's something that RFG also highlighted in its update this week as well, in that the interest rate hiking cycle that's actually happening globally, Gary, is something that's going to be having a heavy impact on consumers. And no doubt the impact of the oil price as well, also indicating that consumers, like you said earlier, are in for a bit of a bite when it comes to the price of basic food stuff.
Absolutely. So I suppose, if you look at financial markets, what we're always trying to price is what's going to happen next. So I suppose it's another interesting piece of news flow that came out this week was just the US GDP numbers and the Federal Reserve minutes that also came out, which I think gave the market a little bit of hope around the inflation story. So in South Africa, our inflation has been a lot more moderate. The South African Reserve Bank has been a little bit more aggressive than we've seen the Fed be previously. So I mean, we've kind of been hiking interest rates in lockstep, even though we haven't seen as aggressive inflation coming into the South African environment. But, we got the second revision of US GDP out this week as well. The market was hoping for a decline of around 1.3%. So a little bit better revision than the 1.4% we got in the first reading. It actually came in at 1.5%, yet the market seems to be rallying on the back of that. And the only way that you can really read that in conjunction with the Federal Reserve minutes is that the Fed is essentially going to blink. They're going to pause, and they're going to say, it's giving them a little bit of ammunition to say, wait a minute, we're heading towards a recession. We've seen, incredible pressure in financial markets. Maybe we aren't going to hike interest rates as aggressively. And also, I suppose, from the Fed minutes, that maybe inflation is going to come down. Remember, the latest US inflation print was actually the rate of increase of inflation was slower than the month before. So it's the first time in a long series of data that we're starting to see a little bit of a turn. So if we are at peak inflation in the US currently, then that could be very good news for financial markets. I do get the sense that there's a little bit of a lag, though, and South Africans are still going to face some seriously higher prices in the near future, but hopefully it doesn't get completely out of control.
What about about Tsogosan? What did you make of their update, Gary? And they're going back to the Southern Sun branding. What did you make of that?
I'm glad they're going back to the Southern Sun branding, because it does get a little bit confusing, because on the exchange at the moment we have Tsogosan Hotels and we have Tsogosan Gaming, two Tsogosans that have very different businesses. One more of a hospitality one. So Southern Sun, they moved to Tsogosan Hotels, changing their name to Tsogosan, at least to Southern Sun, which will at least make the distinction a little bit easier for all the investors out there. I think, looking through their numbers, not bad. They're not yet at the pre-COVID levels. So, you can almost think about hospital groups as the same way as you think about hotel groups. It's about selling beds. We're seeing a lot of the hospital companies that reported this week, back at, beyond the levels they were pre-COVID. Tsogosan not quite as lucky. So I think with, the reopening of these big conferences, that's incredibly important for hotel groups. And that certainly is helping things. They made their revenue now, at least at, I think it's 2.7 billion versus 1.2 billion in the last reporting period. So definitely looking good. They also were a recipient of some insurance proceeds just because of the civil unrest. That is included in the numbers as well. So not quite at pre-COVID levels, but certainly looking a lot better than we have. And we hope that we can put COVID now behind us and our hospitality sector can get back to business.